everyone. Welcome to another StockTwits executive interview. I'm Katie Perry here with Ian Bode, Chief Strategy Officer at ONDO Global Markets. Ian, welcome to the show.
Thanks for having me, Katie.
How are you doing today?
Pretty good. Yeah, I can't complain.
All
It's a
right.
Friday.
That's good. I know, right? We made it. So I'm excited to talk to you guys because we're going to talk about tokenization, which is something that is all over the place currently. I was just at Money 2020. Everyone was talking about it. Everyone was talking about it at Stocktoberfest, where I know ONDO had a presence. You guys are a platform that let people invest in traditional assets, so your stocks, your bonds, through blockchain-based tokens and making them easier to trade and access globally. And so I'm excited to kind of break down what that means with you today. So I guess to kick things off, let's do a quick intro. ONDO, in your own words, what you're building and what tokenization looks like at ONDO.
Very good. I love it. So yes, ONDO is a company. We put traditional financial assets. This could be, treasuries, stocks, ETFs, you name it. Anything that trades on normal public markets, essentially. We take those assets and we tokenize them. So we put them on blockchain-based rails to make them available to a global audience. We also develop these services and infrastructure to make that process more seamless for other asset managers and financial institutions, and really give these assets new utility on chain to make them better than their normal version that you can get in a brokerage account. As you mentioned, tokenization's quite the hype right now. It's interesting because before joining ONDO, I spent almost 10 years at McKinsey. And I was working with a lot of the traditional financial institutions on the topic of tokenization. And the first study I did on tokenization was back in 2016. So it's not a new topic per se.
Wow.
Right? It's been around for quite some time. And it hasn't really lived up to the hype up until now, because I think a couple of things have changed. The infrastructure on blockchain is just way better. The process to do it is significantly easier. We're starting to finally get regulatory clarity in the US on how to do it also for the US market. But most importantly, there's an asset that has already been tokenized. It is very large right now and really is the liquidity for all of these different types of trades, whether it's into tokenized stocks, ETFs, treasuries, or crypto, and that's really a stablecoin, right? A stablecoin really is just tokenized cash, essentially. Any type of tokenization works in a similar way. You take a traditional asset, in the case of a stablecoin, it's cash. You put it into a bank account or another custodian in the form of treasuries. You make sure it doesn't move, and then you issue a token on blockchain rails that basically represents a dollar that is being held in that bank account. Now, why would you do that in the first place? Well, because this token is running on new different types of rails that can operate 24/7, where you can send it freely between different types of wallets and platforms globally in a second. It basically can move at a fraction of the cost that you can normally move it. And on top of that, you can use it in this emerging ecosystem of decentralized finance, where you can essentially have 24/7 financial services like margin and the like. That's why you put something on blockchain rails. And in the case of a stablecoin, people have found product market fit by essentially having trading pairs in and out of crypto assets. But the basic concept is still the same. You put it on these blockchain-based rails. You can send it 24/7, even on a Sunday, 2 a.m. If you want to send a dollar from a Coinbase account into a Binance account, if you have both of them, right? The only way to do that is with a stablecoin. And so similarly, people are starting to wake up to the fact that, wait a minute, if I can do that with a dollar, why can't I do that with stocks, treasuries, ETFs, etc., where once you've tokenized these things, it becomes very easy to move them around, let's say between down the line, if you have a Fidelity brokerage account and a Robinhood brokerage account or a Coinbase account down the line. If you want to easily move these assets between them 24/7, or even move them towards a self-custodial wallet down the line and use them in 24/7 margin DeFi services, you can, but only once these things are tokenized.
Such a great explanation, because I think it's tokenization, stable coins, both of those buzzwords swirl, and it's good to kind of understand the hierarchy of where they fit, and also super helpful just given even in the last couple of weeks, many of these big banks, financial institutions making moves around stable coins. Do you think the embrace of stable coins, and to your point, this is an application people are really understanding, that's going to kind of bleed into some of these other tokenization applications that you referenced?
Yeah, no, 100%. Everything is being led by stablecoins, and finally people are starting to understand, like, oh, wait a minute. This is
Right.
just like a dollar, but maybe it's actually slightly better because I can very instantly move it from one bank account to another type of account, and I can do that over the weekend, and I can actually use it in different ways that I would normally do that with, right? For some, particularly then if you also add in that a stablecoin is just a very easy way to get access to the US dollar for a global audience. I think then it really starts to click because not only does it move around easier, there's a giant population out there that really would love to hold dollars instead of their local currency for a wide variety of reasons. But historically, if they wanted to do that, I mean, their banks are not going to allow them to do so. They can hold it in like physical paper dollars on that they acquire on some black market. That's not a very safe model. And so a lot of people have figured out that they can get access to a US dollar 24/7 in digital form in the form of a stablecoin. And it's that same audience that we also expect down the line to really move into these tokenized stocks and ETFs. And I think a lot of financial institutions are now waking up to the fact that, wait a minute, this becomes a very interesting distribution channel for some of their products to a global audience that otherwise they wouldn't have access to.
Yeah, and a lot of the headlines we're seeing lately is around sort of these partnerships between DeFi companies and traditional finance, and that's sort of what you guys do. When these institutions come to you at a high level, not getting too technical, but why can't these institutions do this themselves? Why do they need to partner up with these DeFi companies like Ondo in order to get there?
Yeah, I think a lot of it is just they don't understand the tech well enough, or they don't have the tools and infrastructure built out to really do it in a seamless way. A lot of them have, for a very long time, quite frankly, discounted the overall tokenization and crypto space quite a bit, in part because there was no regulatory clarity, in part because, quite frankly, it was just too small, right? For a particularly a GSIB, a very, very large bank to get involved in a space like JP Morgan, you need to be able to show a very, very strong business case for them to really move into the space. And I think, again, that's where stablecoins led the way. You now have companies like Circle and Tether and others that, even from a market cap perspective, are pretty meaningful. So the dollars are there, people like get it. So now these financial institutions that were typically comfortable with being, a fast follower once they saw some people move, now they all want to be a fast follower. But if you want to execute on a strategy like that, move on chain, you need the right people in house. You need to know what you're doing. And a lot of those just don't have the talent just yet. And even if they do, they're not going to develop everything in house. It doesn't make any sense for them to do so. So
Yep.
a lot of them are looking at companies like Ondo to help come on chain, to help bridge really the TradFi to DeFi divide and make sure that there's liquidity on both sides. And that's where we come in and partnering up with a lot of the asset managers. You have Franklin Templeton and BlackRock, Wisdom Tree, Fidelity is now moving on chain. And I'm pretty sure we're going to see a couple of other major announcements over the next 6 months. You have JP Morgan that we did a pilot with earlier in the year, MasterCard, PayPal obviously already launched their stablecoin and is moving in a big way, Stripe. So it really is, particularly now in the US, this onslaught of traditional financial services
Yeah.
moving on chain and trying to find the right partners to work with that both understand DeFi and TradFi so that they know how to actually work with a bank or other financial institution to bring them on chain.
Yeah, and it seems like speed to market's probably a factor too, because it's a bit of an arms race. Eventually, the customer expectation is going to be the 24/7
Totally.
frictionless movement of money. And if you don't have that, you could, that's a risk to the business. Are there specific types of financial institutions that Ondo specifically works with, or could it range from someone like a BlackRock to, a bank? Is there a specific category you focus on?
We started working first and foremost with the other asset managers that were, forward leaning in their innovation. Obviously, BlackRock has been very active in the space after they launched their ETFs and the like. But not just the ETFs, BlackRock also launched tokenized treasury funds with their Bode product that is growing very rapidly now. In fact, the product structure that they launched with, the fund structure and how they did it from a legal perspective, is more or less a copy of one of the funds that we had launched the year before them. So it's very clear that they're looking at, the forward-leading innovative DeFi companies and trying to get best practices that way too. The asset managers were pretty quick to figure out that tokenization becomes a distribution channel to a new global audience that historically may not have had the same level of access as some of their current clients. But now, I think the other category of companies that were pretty early-ish to the digital asset space were the payment companies, because they did
Hmm.
look at stablecoins and the adoption, the volumes on it. So like Visa, PayPal, MasterCard, they've been focusing on this space quite a bit. But now, post Genius Act, it really is the banks that are trying to catch up, who before, under the previous administration, couldn't touch public blockchain rails. Now that clarity is starting to emerge. It'll be good once we get the market structure bill out. But now, really, the banks are, I'd say, the group that are moving on chain the fastest to catch up.
Yeah, and that the Genius Act was July, and it just seems like an onslaught since then. In Europe, we
Yeah.
have, I believe it's Mika or MyCar. There's two ways of saying it, and then I know Canada next week they're supposed to come out with some sort of statement or announcement around their plan for this. So to your point, it's happening really quickly. I'm curious if you think these asset managers moving towards tokenization, the global demand. I think crypto has introduced the world to investing and trading in a way that stocks couldn't because it was decentralized. Do you think every stock, ETF, anything will be tokenized eventually? And what is this? I guess what's the impact on this if you're an investor sitting at home? How do you make sense of the tokenization opportunity alongside the ability to invest directly into some of these things?
Yeah, I definitely think over time, all stocks, ETFs, treasuries, most financial instruments, particularly those that are liquid, will be tokenized and just run on public blockchain rails. In fact, you don't have to believe me. Just look at what Larry Fink says on a weekly basis on CNBC these days, right? Everything will be tokenized, in part because they realize, just like Ondo saw before, that these rails, quite frankly, are just better than what exists in TradFi. I feel like most people, once you've worked in traditional finance and you realize how clunky these existing systems are, tokenization makes a lot more sense than what a lot of
Yeah.
people actually get, because you're like, oh my God, these systems, how is it possible that this still runs on a server from the 70s with a COBOL language, right? Like
Yeah.
it doesn't make any sense. So
Yeah.
I do think most assets will transition towards these blockchain rails, in part because right now they're already better, in part because the speed of innovation and the speed of transactions that you can have on these blockchain rails is just significantly faster. And so
Yeah.
over time, to your point earlier, people right now that are growing up are expecting 24/5 trading, right? That is a generational thing for sure. It's only going to get worse. People who also own crypto in addition to stocks will expect 24/7 trading on their
Yeah.
stocks. Most of that stuff becomes easier to do once your assets are tokenized. And then on
Yeah.
top of that, even once the trading is 24/7, it doesn't mean that your ancillary services like margin and the like immediately move 24/7.
Yeah.
Also on that front, DeFi is probably even a lot better positioned to pull that off. So I think you'll see the tokenization of most assets. I think DeFi will evolve to incorporate most of these traditional stocks and ETFs in an efficient way. And in terms of what it means ultimately for investors, I think they can expect over the next, I don't know, 2 to 3 years for most of this stuff to become 24/7. And at the same time, there's a real investable opportunity as well by investing into companies or crypto projects, crypto tokens associated with the tokenization narrative. I mean, in fact, you saw Securitize announce a
Yep.
SPAC
Yep.
very recently at pretty high valuations. Circle went public
Yep.
at pretty decent valuations. Figure Markets already went public at good valuations. So very clearly, there is demand to get exposure to the tokenization narrative, in part because a lot of people think most markets will tokenize.
Yeah, it's been dizzying keeping up with the headline. You had Visa, MasterCard rumors, the PayPal is all within the last few weeks, which is it's fascinating. What are some of the examples of stocks or ETFs that you guys at Ondo have tokenized?
Yeah, we started with some of the more popular ones. You can buy and trade tokenized Tesla stock, Nvidia, your Palantir. Like think of your top 100 by market cap, give or take. Some of the more popular ETFs that are available. We launched the platform, I want to say almost 2 months ago. We've since gathered, give or take, 370 million in TVL. So there's about 370 million of ONDO tokenized stocks out there right now. In the grand scheme of things, that's not a lot, but it does make us by far the largest one out there, larger than the Robinhood tokenized stocks product, the Kraken tokenized stocks product. And in part, I think it has grown so much because there really is globally this untapped need, particularly in emerging markets, to get easy access to US capital markets and those household names like Tesla, Apple, Nvidia, and the like. If you look at what US capital markets was really able to do as a wealth engine for the average American household, like the S&P 500 and the Nasdaq 100 are pretty unparalleled, right? But that really has been something that really is reserved for people living in the West, particularly in the US, let alone the West. Now with our platform, people on crypto exchanges with crypto wallets, people who can navigate the various DEX exchanges are now able to buy these things by themselves.
Yeah, it's been even the democratization across economic strata in the U.S. There was I just saw a BlackRock report come out that I think over half of low to moderate income people are investing, and so you could see how that kind of carries out elsewhere in the world. I have a couple more questions for you. One is just on sort of liquidity and how this works with tokenized versus how do tokenized stocks and ETFs face any liquidity challenges, or how do you think about those or mitigate that as an investor?
Yeah, it's a really, really, really good question, because I think that's ultimately where the reason why we are the largest is because we figured out the liquidity problem. Like tokenizing something is pretty easy to do, quite frankly. All you do is take a traditional asset, keep it in a normal account, you issue a token against it, and then ta-da, you've tokenized it and it freely trades. That's not the hard part, right? The hard part is making sure that the price of this asset always reflects the underlying that you're backing it with, and making sure that it doesn't depeg. And doing that at a wide variety of liquidity levels so that you can really support even big institutional funds buying these things on chain. Like when someone on chain wants to buy $1 million worth of tokenized Tesla, they should be able to buy it at the exact same price as they can buy it at your Charles Schwab or Fidelity or whatever brokerage account, right? And so far, the tokenized stocks models that have come out weren't really able to do that, because if you want to have that price, like the exact same price, you have to find a way to take the liquidity of traditional markets that people are used to and find a way to very easily bridge that onto these blockchain rails so that when someone buys the stock on chain, when you mint them that token, they're getting the same price as you're getting the underlying asset. And the way we've built our platform is essentially that. You can almost think of it as a bridge to put the best bid offer that you can get at a normal brokerage on chain. And so as a result, I think we've seen our growth. So long story short, liquidity is the hard part. Our platform does offer the exact same prices in the normal brokerage account for on-chain rails. We can do that 24/5. And I think that's in part been the missing piece. Now that that's been solved, I think you'll see a lot more adoption on this asset class in particular.
All right. And looking ahead, where do you see the role Ondo's playing in connecting, continuing to connect traditional finance with blockchain? You think this is eventually just all going to be one thing and we're not going to bifurcate the two?
Yeah, I think so. I mean, most people honestly don't care on whether something is tokenized or not. Neither should they. I think they're just going to expect 24/7 collateral mobility, 24/7 margin, doing that at the exact same price. The simple concept of having your crypto and your stocks on the same wallet and platform, being able to cross collateralize a position as you want, like all of those things essentially are user value props, and people should expect them over time. The way to do that in the most straightforward way is to do it with tokenized stocks and crypto all on blockchain rails.
Fascinating stuff and really educational as well, Ian. I want to thank you, Ian Bode, Chief Strategy Officer at ONDO. Thank you for stopping by. You'll have to come back when you guys have some more updates for us.
Thank you so much. Been a pleasure.